Well, good morning. Welcome back to the Broadcast Retirement Network. This is BRN AM for Friday, January 12th, 2024. At our top story today, we're talking U.S. real estate and in particular, U.S. REIT outlook for 2024. And joining me now to discuss this and a lot more, Harold Chen is with Fitch Ratings. Harold, always great to see you. Thanks so much for joining us on the program this morning.
Yeah, thanks for having me.
Yeah, and it's a happy new year. In this segment, we hope it's a happy new year around the world. And certainly wishing you and the Fitch team a happy new year. I want to start by looking backwards. And I want to look at 2023. Here we are, the second week of January. How did REITs do overall when you look back for 2023?
Yeah, 2023 was definitely a difficult year, right? So same with any other industry. REITs were definitely affected by sort of general slowdown fears, increasing interest rates. That definitely was, very salient for REITs. And, the overall banking turmoil that was in the headlines definitely put a damper on REITs' ability to raise new funds, right?
And
Our outlook at the beginning of the year for 2023 was neutral. And in the middle of the year, we reduced that to deteriorating based on ability to access capital, the bank turmoil, geopolitical instability. Those are all things that negatively affected REITs, and definitely office REITs in particular. I'm sure you and everybody else has been hearing about office buildings being empty, hybrid work, how that's going to affect commercial real estate. So that was 2023. That's not to say that, all REITs were negatively affected, or that, REITs were affected, equally across the board. Definitely, things varied a lot by sector. Industrial REITs, for example, stuff like logistics and warehouses tended to do pretty well. Necessity-based retail wasn't meaningfully hit. Gaming REITs did pretty well. Office obviously was hit pretty hard. In general, that continues to be an area in which we're watching for further deterioration. But I would say overall, based on the backdrop of increasing interest rates, difficult lending environment, 2023 was difficult.
Yeah, certainly it's consistent with what we've covered previously on the network, but at a very lay person's level. I think we talked more about it anecdotally. How did healthcare do? Because here we are post-pandemic for many of us, but we still need healthcare. We still need to go to the doctor. We still need to get surgeries. We still need the preventative care. How did healthcare do during the 2023 time period?
Yeah, I think healthcare is very interesting. Obviously healthcare was really negatively impacted during the pandemic because, you couldn't have elective surgeries. People were advised to kind of stay home. And so healthcare operators were, really negatively impacted. They didn't have volumes. They weren't having that revenue come in. And over time, we have seen occupancy at, skilled nursing, senior housing facilities continue to improve. But stuff is not where it was pre-pandemic still. For healthcare REITs, a lot of them have been able to kind of manage their risk profile through the pandemic and through those stresses, even as occupancies may have been lower. I would say, in general, the longer term sort of outlook for healthcare REITs is sort of the recovery is continuing. It is slow because of, reduced occupancy, nurse staffing shortages and wage increases, which is, kind of negatively impacting healthcare REITs' ability to make money. And all of those things are sort of improving slowly over time.
Yeah, and that's I would say it's a good thing. We want to in particular, we want the healthcare sector to constantly improve because we're going to need them as we age. I want to finish up this segment by talking about bringing back up the commercial real estate sector. You talked about it. We've talked about it again on this network, Silicon Valley Bank, some of the challenges there. What about converting some of these office spaces to residential? From all accounts, it's not easy to do. And so does that help out some of these office owners, people that are owning either the REIT or actually own the physical property themselves?
Yeah. I will kind of preface by saying that office is generally not my area of expertise.
Sure.
But that being said, I think, office to residential conversions are a useful method in terms of taking properties that are not, gold star office properties and kind of giving them another use. That being said, I would say that it's not sort of a panacea. It is very expensive. Zoning issues mean that not every office building can be converted to residential. There's a whole conversation there. And the other thing is that the office REITs that we cover, although you do kind of hear about this overall impacts to office, and the office REITs certainly are not, unaffected by that. They tend to own better properties, higher quality properties. And so even though, again, we are kind of looking at the negative impacts to them as to, all office, the REITs in particular are more insulated from sort of the worst effects of lower quality office properties that really, are not going to see a good recovery from, pandemic work from home trends. They tend to kind of have, better best-in-class properties and stuff like that.
Thanks, Harold. I need to take a very quick break. When we come back, we'll dive further into the REIT outlook for 2024. Should you be an investor? You're going to want to stay tuned right here. BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Well, Harold, thanks so much for staying with us. Really appreciate you hanging around for segment number 2 this morning.
Yeah, thanks so much for having me.
Yeah, it's a fun conversation. And we did a look back in the first segment. Now, let's look ahead in 2024. So you already prefaced that in 2022, I think meaning Fitch, had a negative interpretation or neutral. It was neutral, but then it shifted towards negative. Looking at 2024, we're only 2 weeks in. How does the REIT market look to Fitch?
Yeah, we put out our 2024 outlook last month, and the outlook for 2024 for us continues to be deteriorating. That's all relative. As I mentioned, even in 2023, when things are deteriorating, there were sort of winners and losers. Mm-hmm. Certain sectors such as industrial were doing better. Certain sectors such as office were doing worse. And when we say deteriorating, it's all relative. So even though we continue to expect, the industrial sector, for example, to, be relatively strong, growth is going to be muted from where we expected them previously. And so when we say deteriorating, again, we're kind of looking at overall, Fitch expects sort of a, weaker growth environment for 2024. We're not calling for a recession at this point. But all that the same, the first half of 2024 we expect will still be sort of weaker in terms of growth. That's going to affect operators. That's going to affect REITs. And the market conditions still remain choppy. Interest rates are high. There are expectations for interest rates to kind of decline over time, but whether that will actually happen is anybody's guess. And so, our view for 2024 for the overall REIT sector is deteriorating.
Yeah, you mean you're not in the same conversations that Jay Powell and the Board of Governors is about that? Because I'm not in there either, but assumed you might be. Harold, you mentioned some of the sectors. I want to ask you about the geopolitical tensions. I don't want to talk about the politics of it, but does some of that weigh into the impact on equity REITs, for example, as the conflicts going on in the Middle East, the war in Ukraine, other things that pop up? How will that have an impact? Could that have an impact on 2024 REIT performance?
I'm not sure how much of a direct impact those things would have, but I think in terms of when you look at the impact to overall geopolitical instability, how confident are consumers, things like that, it could have an impact. It's difficult for me to really speculate too much more on it. It's not my area of expertise.
Well, Harold, I'm not going to put you on the spot. I apologize to you, but I appreciate your insight. With that being said, I mean, REITs have a very important component for a lot of different types of portfolios. And I want to ask you, would you expect REIT allocations, even given some of the challenges we've had in 2023 and perhaps in 2024, allocations to continue with people still investing in REITs? I mean, there's still a need for offices, maybe not at the same level. There's still a need for retail. People are clearly buying. In fact, they're running up a lot of debt. So is there still use for the REIT in the overall portfolio of an endowment, a foundation, a pension, or even a personal investor?
Yeah, I think, when you look back at sort of the establishment of, the REIT profile, or the REIT structure rather, it was to allow people to kind of invest into real estate without necessarily having to, own individual properties, right? And I think, as we look forward, REITs, the structure is very interesting because they are dependent on markets for fundraising, but at the same time, they dividend out a meaningful portion of their earnings. And they are the landlords, right? They are kind of at the base level. They have a little bit of insulation generally from the underlying operations, so they tend to be, sort of less cyclically exposed than the individual operators. So I think, when we look at the REITs, there's a reason why the vast majority of them are rated investment grade by Fitch, right? It's because of that stability, the ability to manage capital, the overall, strength of the credit profile. And so, when people look at those to invest, I think those are sort of the strengths that they want to look at, and whether or not they will sort of allocate at, more or less of an individual asset type. There's certainly risks and strengths with each one. And, obviously we see that in terms of office at the moment, but also in terms of individual operators within those asset types.
Yeah. Well, it's certainly going to be an interesting 2024. Harold, we really appreciate you coming on the program, and we look forward to having you back on the program again very soon.
Yeah, thanks so much.
That wraps up this episode of BRNAM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, then visit our website. We're back again tomorrow with another edition of BRN Weekly. Jane King will be joining us from the NASDAQ to help break down markets for the week, and then we'll be taking a look back at some of our best segments. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.